Hi everyone, welcome to our latest Reinsurance News and Artemis live webcast, and this time we're holding it in association with our kind partner Genpact. Now, Genpact brings together technology and industry expertise to help businesses on their digital transformation journey, and you can read more about Genpact using the links in the resources section on the screen in front of you. So today, with the help of a panel of experts, we're going to discuss the use of technology within the reinsurance industry and the importance of data as a driver of future innovation. Now, the push for efficiency, digitalization, and innovation in reinsurance, as well as the increasing availability of better and more advanced technological solutions, promises to transform industry operations and the way the business is underwritten, importantly, as well. And we're going to touch on topics ranging from the technological maturity of the reinsurance market to the importance of having robust data, but as well as having it, being able to actually access it and use it effectively as well. How technology is going to drive trends in matching risk and capital efficiently. And we're also going to hear our panelists' opinions on how the future reinsurance landscape may look as technology gets increasingly adopted at pace. So I'm really pleased to have a great panel with me today, and I'd like to introduce them. So we have Sameer Dewan, Global Business and Digital Transformation Leader for Insurance at Genpact. We have Vasco Nunes, Lead for the Data Platform and Operations at Swiss Re, Sean Bourgeois, Founder and CEO of Tremor Technologies, and Nigel Walsh, Managing Director, Insurance at Google. So welcome all of you. Thank you very much for joining the webcast today.
Thank you. Pleasure
to be here. So rather than go into each person's background in depth, I'm going to let their responses to the questions do the talking, and you'll get to learn more about them as we go and hear their opinions on the subject matter. And we've only got around an hour or so, so we're going to get right into it. Just a quick reminder for those watching that in front of you on the screen, there is a Q&A box. You can enter questions into there. We'll typically get to these towards the end of the discussion, but if anything comes up you want to ask or dive into more deeply, please do send a question and we'll try and answer some of those towards the end. So to begin, I'm going to turn to Sameer. So perhaps you could give us a little background into the current state of play in reinsurance as far as digitalization goes from the Genpact point of view. The industry seems to have been relatively quick to adapt and adopt new tech in some areas, but slower in others. So what's your thoughts on its progress so far?
Yeah, first of all, thank you, Steve, for really setting this up and really looking forward to the dialogue today with this fantastic group on a topic that is so very relevant and even become more relevant in the last 2 years. I think if I was to think about where the industry is and how it has leveraged and the opportunities, I think a little bit of a mixed bag in my view. So one area that really stands out for me where the industry has gone leaps and bounds, and specifically the reinsurance carriers, is on the cat modeling area. They've leveraged new data sets extensively. There is evolution in the science of looking at how they look at natural hazards. Obviously, there's advancement in computation capability across, and that has definitely yielded better underwriting results. I do think that the reinsurance carriers have actually taken a leap and done much more than the insurance companies, and in fact helped and supported them in many ways in that area. So that clearly is something that stands out, where they leverage data, analytics, technology all together in a very comprehensive way. And there's more to do. There's always is, and there's more things that get added. But I think that's definitely a big win, and that's core to the business that they write. I think the two areas that I see, and I see a lot of traction happening in the last 18, 24 months, more so since we got into the what I call the post-COVID stage, but long way to go on how we manage our reinsurance data and governance. And what I mean by that is not just data within the organization that they have across multiple systems, both manual and some more automated processes, but also how data is managed in the ecosystem and how the data transfer plays out. I think that's a huge opportunity. Number of initiatives playing out in that space, but still some distance to go. In fact, I would think that's much more neglected an area than being on the reinsurance from that perspective. I think the second piece that I see is just under investment in reinsurance core technology. And there are technologies in play. but I don't think they necessarily meet the needs of the complexities that we have to deal with today. A lot of the work is still performed manually, and a lot of it is repetitive. Having said that, I think we are at a tipping point, and just with the general investment in technology going up, there are just several initiatives out there at play. As in to be looking at both how data transfer happens between across the broker and the reinsurer across the whole cycle, whether it is using blockchain or whether new accord standards that will come in. I do think even from a technology infrastructure perspective, both from reinsurance organizations looking at what kind of systems should they adopt and going after upgrades, to even the service providers coming in and making new investments in that area because they see that as a big opportunity area. So I would say significant focus and attention. Some areas that have been addressed well, but others like data management and then basic fundamental system structures putting in place, a lot more opportunity to go, but moving much faster than they have ever moved before.
Thanks, Sameer. Yeah, that sounds like a very realistic viewpoint of where the state of play is today. Now, we're going to turn to Vasco from Swiss Re, and perhaps obviously you lead on data for the world's largest reinsurance company, or one of the world's largest reinsurance companies. Perhaps you could follow on from Sameer and give us your view on the same. How do you feel the industry is doing? Where has it done very well, and where perhaps is it falling a little short so far?
Thanks, Steve. And again, very, very happy to be here today with such a great panel. I think the topic couldn't be more relevant. So I actually sense that now is one of the best opportunities for the industry to transform, if not the best. And clearly the industry is moving at pace and fast. If you just look at the past few years, we actually see significant developments. So I would delve maybe into a few, right? So one to me is that we see now the strategic relevance of data, tech, and digital leadership roles, for many companies. So we see, many firms have, for example, appoint, chief data officers, chief technology officers, digital innovation officers. So this continues, right? But it's definitely a strong trend. Second element I would say is insurers are focusing more on developing these data science teams that are basically combining their skills with actuarial expertise, and this is becoming more, generalized across the board. Of course, we see the increasing adoption of, artificial intelligence, machine learning, though, quite frankly, I think access to data in the necessary quantity and quality remains a challenge for many. There's the cloud transformation, which is, giving and bringing a much broader access to data, scalable tools. Of course, this brings much more power to the hands of, industry experts, be it risk modelers, underwriters, actuaries. And again, if I reflect on what does this mean for business models, I think there's sort of two interesting developments. So one is the insurance business models are expanding from the highly dominant risk transfer space to also risk management and prevention. And then we also see this emergence of, ecosystems, platforms, as a sort of new distribution and engagement channel. So a lot is happening. I agree that somehow it's still a bit of a mixed bag, but I think this is very, very clearly all driving into the same transformative direction. Now, what I would say is that despite all these advancements, the role of data will also depend on whether people really treat data as an asset, right? So are we empowering, the workforces to work with the data they need, with the right governance, quality? And I would say that actually this is the biggest challenge for the industry. So not so much about like the tech transformation per se, but the question I would ask here, and I'm sure we'll discuss later, is the industry thinking about all those other elements that need to be in place beyond, of course, having excellent tech available, Steve?
That's a really good point, Vasco. Thank you. Actually, how you manage data, but then also empower people to collect it in the right way, make use of it across the organization and the enterprise is just as key as having all of the fancy technology available, like machine learning, etc. You've really got to start at the beginning to be able to put those technologies to work anyway, effectively. Now, moving on, I'm going to turn to Nigel Walsh from Google. Now, you sit on the outside, sort of looking in on the industry, and you've got a lot of experience in the insurtech space yourself. And I'm sure pretty much every company in the industry is using one or other of Google's services, including the cloud unit you focus on. I'm interested in your view as somebody who works for the industry from the outside. How do you feel the reinsurance industry's digitalization progress is going to date?
Thanks, Stephen. And it's hard to disagree with Sameer and Vasco here. I should probably caveat this with I'm an impatient person by default, and that puts me in a really bad spot for insurance. For the last 15 or so years when I've been working with insurers, I'm always trying to go faster, go quicker. We all see the disruption and engagement that goes on around us. And we've all talked before about what's happened in personal lines. As you move back into commercial, then reinsurance, I do think we slow down. And I'm not often sure why. I mean, to some of the points earlier, and you used the words fancy technology. I don't think technology on its own is the answer. Of course, it's a core enablement, but actually, if you go back to the core tenets of people, process, technology all put together, and I'm using the very simple framework to look at it, do we have the right individuals with the right empowered technology to make it work first and foremost? And are we, you use the word digitization, that word scares the life out of me. Because it scares the life out of me because it says, let's take what we did 100, 200, 300 years ago and just make it digital. And I often wonder, and I did this in my previous role at Deloitte as well, I often wonder if we were to start with a blank sheet of paper, what would it look like? How would we reinvent it so that we're not stuck with the current process or the current routine or the current regime or the rules and rigor that we have in place to get through? So often I feel that we deploy technology to create a faster horse, when actually what we need is the Model T Ford.
I think that's a fantastic point, Nigel. Yes, sometimes rather than digitalizing, you're better off reimagining, perhaps, starting at the beginning. That's a really great point and something we'll probably come on to later in the discussion. But now I'm going to turn to Sean, and I mean, you've obviously founded and you're CEO of a company that is specifically offering a new way to transact in reinsurance business at Tremor. And you're really trying to reimagine what is a key piece of the reinsurance market chain. But how do you view the industry's adoption of technology and its appetite to embrace modernization?
Yeah, so thanks, Steve. Yeah, I would certainly agree with the previous comments, in particular, what Nigel just closed on. I would say, as everyone knows, reinsurance in general is a relationship business. But kind of the funny thing is, most financial services today, businesses today are relationship businesses, right? But technology has fundamentally changed most capital markets. I think there's a bit of a myth in the reinsurance industry that it's unique and very personal, and as such, technology cannot make the market more efficient. The same was said of most capital markets, most recently corporate bonds, all of which have made much more price and cost efficient with the technologies that have been introduced there, right? So it's our view that technology can really help modernize the reinsurance market while accounting for relationships, longstanding trading histories, losses being paid, and so on. And as mentioned a little bit earlier as well, while there is some interesting digitization work happening at the margin, and we also kind of bristle at that word digitization of the current process, there are these point examples of some use cases applying ML and AI on a small scale. But it's important to note that most of the reinsurance market is really not geared up to deploy really robust data lakes and cleaning massive amounts of data, storing it efficiently, and processing it in really powerful ways, running neural networks to find sort of wonderfully data-driven decisions and insights yet, right? This is coming, but it's not here yet. Most folks aren't quite set up to do that. So I think as such, it's very early innings in the reinsurance industry, technically speaking, but with $1 trillion plus of risk transferring every year really inefficiently, which most in the market will recognize, I think it's a matter of time before the industry really begins to adopt modern trading technologies. This is starting to happen in meaningful ways. And of course, our view is that one of the biggest technology opportunities in the reinsurance industry is to vastly improve market structure. And improving market structure is kind of getting to the heart of what Nigel was saying. It's really reimagining how should risk be transferred to capital in modern ways.
Yeah, as you well know, Sean, I concur with your final statement there about reimagining the way capital and risk are matched together. And I think from the back of that, you perhaps spin off the processes that reimagine the rest of the industry's processes as well. Because it seems to me that reinsurance has historically been a paper-driven industry, but one that has always relied on data, really. I mean, we measure loss ratios, we measure probabilities, we measure risk appetite, and people have made their decisions based on numbers right the way from the industry's early beginnings, really. But now we're seeing, obviously, the industry transform into one where technology is going to provide the kind of the ability to interpret that much more richly and hopefully at a much more accurate way as well, while also being able to store, access, manipulate, and interpret data is going to become just a key differentiator for the industry and the participants in it. So, Vasco, perhaps moving back to you this time to start off this round of questions, can you talk us through the sort of philosophy for how data is used at Swiss Re, and in a global organization, obviously, with a lot of employees are in different locations? How challenging has it been to shift to a sort of data-first approach across, not just across the technology angle of the business, but also across product, underwriting, claims, investment? Has that been an easy process? Is it an ongoing process?
Yeah, thanks, Stephen. Great question. So maybe let me start with the philosophy part of the question, and then I'll delve into where we stand. So, I mean, when I look at Swiss Re, our philosophy is to represent every aspect of our business's data. And what I mean by this is really capturing end-to-end and making available data from any perspective of our businesses and as needed, right? And this is to the entire company. Now, maybe just to go a bit into the specifics. So one example, imagine one opening a claims adjustment report and then being able to trace this full contract history, from submission to quote to reserves assigned for that specific contract, and even seeing how that particular contract fits into, say, a line of business portfolio or our risk appetite. Or again, going back to that very same claim I just mentioned, and having the opportunity to look at satellite data, for example, to run a damage assessment and so on. Now, if I look a bit at our ambition in the firm, what we intend and what we're doing very actively is creating what we call this single source of truth, with basically all the data that is easily discoverable, across the firm, and empowers then our employees with all the necessary, insights, clearly respecting, and this is very important for us, all the client and legal considerations, right? Now, maybe expanding on where we are right now. So we, unsurprisingly, we focused in the beginning, quite heavily on the foundation part. So we now have this firm-wide common data platform, and I reiterate the word firm-wide. And this actually allows for the first time, our teams to collaborate on what we have as group-wide data assets. And this is across organizational boundaries, giving clearly them, better and faster analysis and exploration opportunities as to how, for example, events impact our business. And from my experience, I've been, working in the financial services industry for, many years. What I've seen is that what typically happens is many companies have, a lot of really, great experts, doing data analysis, looking and generating insights. However, typically these are often done in some separate space or environment, in many cases as one-offs. I think we already heard earlier today this notion of a use case here, a use case there. And what happens then is, if the next team comes and wants to do some kind of similar analysis, well, typically they would start from scratch, right? And of course, then that means different data, probably some differences in methodologies. And I'm sure many people on today's event would have heard the word reconciliation very often, right? It's just a bit of a price to pay with such approach. So if I look at the benefit of this firm-wide platform approach, what we're doing is basically building on existing work, sharing and reusing data, and insights, and ultimately knowledge, so that we can basically derive outcomes faster. And maybe just I guess we're all aware of this very unfortunate explosion that we had in Beirut last year, and what we could see is by taking this data-first approach, the teams could look at first loss estimates, in a very short period of time, because they could essentially, connect these various dimensions of data using the geospatial analytics for that purpose. Now, just to reiterate, I think when we think about such a journey, it's very important to look at compliance, regulation, terms. So I think this is very important for anybody out there that is going to do such a journey. Keep that in mind, because you have to think about this, from day one. Now, you were also asking, Steve, about how challenging this shift is for us. And I would say, well, the reality is that a true data-first approach requires reforming the entire organization. So it's not just about tech. It requires clearly a culture shift, rethinking of existing business processes. Of course, requires a lot of talent that is quite scarce, a lot of cross-functional collaboration around all these complex topics that are typically at this difficult intersection of, business, data, technology, right? And these are all challenges that I feel we've been making, very significant progress on over the past few years. And for me, I think, I can just describe it as a very exciting journey, Steve.
Great, thank you, Vasco. Interesting that you also mentioned the culture aspect there, which I think rings true to what Nigel was saying earlier, and also Sean and Sameer. It seems culture is as important as anything else when you're trying to move a business forwards, as we all know. Nigel, turning back to you, Google's mission is really to help companies, help reinsurers, whoever it might be, better understand the world through data. So can you give us your view as to the data maturity of the industry, and how critical is it in your eyes that it gets up to speed? And I guess also maybe give us a quick flavor of what you're doing at Google to help the industry do that.
Yeah, I mean, the mission is very clear. It has been since day one, around organizing the world's information and making it easy and accessible for everyone to use. I still pinch myself on many days and realize I actually work for Google. It truly is a privilege and an honor. It's the first company I haven't had to tell my mum what the company does, because obviously everyone knows what you do. But to your point, when you start to dig through the layers and work out what we're up to and where we're going, there is an amazing opportunity, I think, collectively across all industries, but insurance specifically, because insurance is a data-first organization. It's what we do. We don't manufacture cars. We don't do all these other things. We enable all those things to take place. And you go back to your comment earlier about information exchange. Well, Lloyd's of London was a coffee shop where people went to share information. That's just been digitized or changed or made easy and accessible in different ways. And as the volumes and whatever else have changed over the years, we've created processes and capabilities to support that going forward. I guess to your question around maturity, it's an interesting one, because I think you've always got to balance what's good enough for us as an organ. Does it need to be perfect versus does it need to be good enough versus how quickly do we want it? And you look at natural catastrophe, you look at large events or whatever else. Do you want instant information and insight, whether it's from satellite or otherwise, very quickly to give you a view of what's going on? Or do you want to wait a little bit longer and get the exact detail and number? What we're actually looking at and whether there's, whether what's involved, that might change. But I think we're often too obsessed with perfect and not obsessed often enough with actually speed and dynamism. And when I say dynamism, I actually talk about, well, why doesn't this change daily? I do think the business model of insurance as it currently stands has not really changed since we started, right? I mean, it's not really evolved too much. And many of these insurtechs have been born or bought out of, could we change it? And the reason they've gone out on their own is, could they change it without the constraints of a organization that is very successful, has thousands of people, has processes and people in place to do things, and just needs to get out of its own way to try something different. So often I think the maturity of the data is there, but actually we just haven't got the capability to let it try something different to what we've always done. Hence why you see people starting these things on the edge. And there's a whole host of other areas that we can dig into. That, you know, you look at the number of satellites that one of my colleagues was telling me is changing dramatically and was only ever going to get more and more. The volumes of data we have from different capabilities that's all been aggregated now at scale and pace, and I'll talk about those some of those later on. It's never going to get worse, and our capability to process it is not going to get worse either. We talk about quantum computing and lots of other things that will just make it easier and easier going forward. But I think actually we've leaned in on this conversation to, well, how have we got the right mechanism and capability then to deal with it going forward? And I think maybe with technology supporting it or driving it, maybe that's one of the things that we should be saying, have we got all the right capabilities and people in place to make that work?
Yeah, that's another very interesting point there, Nigel, when you said about maybe it should be good enough rather than trying to make it perfect. And certainly there is evidence of people now trying to provide incremental updates to data points that are really helpful for the industry, but much more frequently than the quarterly updates that people previously had. I'm thinking binder information in the London market, for one thing, which can be something people will often complain about being terribly slow, but perhaps nowadays we have the ability to make these quicker. We just need people to really step up and make that happen in some cases.
I mean, to your point, and sorry to jump back in, but you know, we've seen lots of new things come out with digital binders as an example. And is that an evolution or is that a revolution? I would argue it's an evolution, and it's better than what we had, but should we be doing it that way?
Yeah, should we be thinking bigger perhaps in some cases? Turning to you, Sameer, in your experience working with insurers and reinsurers, what are the kinds of topics they're asking Genpact for help with? And I guess also, where do you think the focus maybe should be for some of these companies, as in where can some of the best gains be made in digitalization, in your opinion?
You know, I must compliment Vasco on really setting up the foundation for data and doing that on an organizational-wide basis, and really being able to drive access to that. And I will tell you, a large part of the work that we end up doing, and it's different across different industries, but within specifically reinsurance, is around helping set the foundations. So something as fundamental as going back and looking at the process design, setting in workflows, building the right target operating model on how the reinsurance organization should look like, is almost fundamental. Providing workflows so that you can actually have a seamless flow of business, putting in the right controls, very key. Some things that have happened in other lines of business and other areas in many years ago. So that's almost one of the core areas. I think the other core area, and one of my colleagues talked about how data is core, and then it is the foundation of the entire industry that is set up, and we're making all the decisions based on that. We don't make any cars or any manufacture anything. It's based on the data that you get to. So a lot of work happening in management and governance of data integrity, data quality. How do you bring it together? How do you look at both external and internal data so that people can then model and price effectively? And to the point that was just made, do it quickly with speed. So I think that's the second area. So setting the process and the target operating model, looking at the data. And then the third piece that we are seeing, and it may be a specific ask in several areas, is really the data that is comes in both structured and unstructured ways. And then there is somebody who keys in, and then again at multiple times. But how do you actually extract that data? And this is a place where I do see application for AI ML in many ways. One pocket where on the reinsurance side it has definitely been applied is to be able to extract it quickly, get to the insights of what you need to, and get through and make the underwriting process more effective. So I think those probably are the three key areas that I see most of the work being done in. I do think, Steve, what we need to do is make sure that we are setting the foundation, and somebody in the group talked about, of the data process and technology, and set those right foundations before we actually progress to the next level on what is the cutting edge that we need to do. So once we have those, it will enable everything else. So that's one piece where I think big focus needed. And then the second piece is the culture. And culture is in terms of leveraging the data, in terms of participating in that, in terms of contributing to it, because every one of us will need to do that for us to be able to have built that robustness that is needed. So those are the two pockets of investments that I will see: setting the foundation, and two is getting and establishing the right culture on everybody thinking in that way and progressing in that direction.
Yeah, thank you, Sameer. It's definitely about setting the groundwork correctly to enable organizations to really begin to innovate as well, I suppose, with data, which you can only do once you're set up and structured correctly, or at least it comes more easily at that stage. So moving along to Sean at Tremor, obviously data is really important to your organization and also how you use that for your clients. You provide obviously rich insights into the transactions that get traded on your platform and provide that back to reinsurers. But how ready are companies to use a marketplace technology like Tremor is offering? And is this something that you have to do a lot of hand holding to help users get up to speed, or do you find they're ready to take the jump to trading electronically or to transferring risk electronically?
Yeah, so we think that companies are definitely ready to make better decisions with data, but the problem is most are making really important decisions with very limited data. As noted earlier, in our view, the biggest opportunity to modernize the reinsurance market, to kind of rethink this market, is to improve market structure. So, the current approach to pricing and allocating literally billions of dollars of reinsurance every year is done so on really, incredibly sparse data. In fact, the data in many cases, it actually isn't even there from a marketplace perspective in particular. So in our view, kind of what needs to happen is the market structure itself needs to modernize. As had been mentioned earlier in the conversation, is kind of rethinking how the market trades. And what we mean by this a little more specifically is that capacity providers need to be allowed to express really rich preferences in covering risk, the prices they want for every unit of risk that they take on, given the portfolio strategy that they have, layering on mathematical subjectivities on both sides of the market to really have a complete picture of that marketplace. But doing so the way we're operating here at Tremor, it really brings a whole new data set to bear where perfect market clearing prices can be found, right? So there's no more guesswork, there's no more expensive oversubscription. And in our case, we're actually creating this entirely new data set for the benefit of the market overall, whereby the market can transact much more transparently, with far better price discovery in a much more price and cost efficient way. But to your question, the best part is, in terms of readiness, not much really needs to change before or after using Tremor. Tremor itself is a low technology lift for all sides of the market. There's no standardization required and harmonization up front. There's no extensive software training needed. There's no installation issues or maintenance headaches. It's a fast, simple, cloud-based interaction that fits sort of neatly into the business processes today of all market participants. So for us, there's not really a readiness issue from a tech perspective. It's just kind of having a fit-for-purpose technology in the right market structure that can really improve things.
Sure, yeah. And so if we were to zero in on the value proposition of that kind of technology, Sean, I mean, it's something that you'd obviously love to be embedded in the workflow of the reinsurance industry so that they come to trade using your platform or one of other platforms out there. Do you think there's an opportunity to affect a much more wholesale transformation of the business by that kind of adoption, and particularly if these are services where there's not a massive hurdle for companies to really embrace them?
Yeah, definitely. I mean, as noted for us, the biggest opportunity out there is really to better match risk to capital with technology, thereby growing the market, reducing the protection gap. You do that with modern market structure. In the current market, as I think all of us know, it's not only sort of slow and opaque and expensive, but it gets the price wrong every time, probably very wrong every time, and nobody gets exactly what they want. And that's not good for buyers. It's not good for sellers. It's also why most modern capital markets have adopted technology to manage price discovery and allocation of who gets what, essentially, whereby brokers play an advisory role and an execution role. And we believe that all of this is coming to the reinsurance market. It's coming quickly to the market. And this is where we think the market will sort of experience much more step function improvement, massive efficiency gains from a tech perspective, versus just at the margin, as has been mentioned a few times on the panel.
Yeah, no, that's interesting. I mean, it's obviously something that's core to my heart, as anybody who reads what I write on Artemis will know, that efficiency in terms of matching risk and capital and how we do that, I think technology has such a huge role to play. And more broadly in the industry in terms of improving the operational side and claims and how they relate to their customers and clients on the front end as well. Sameer, I'm going to turn to you now. When we start to think about innovation and the gains that you can make through that, and specifically on the reinsurance sector, do you think there are any really significant advantages that a tech-focused, digital-first and data-first reinsurer would have in the future? Are those who embrace this soon and well, or embrace it best, are they going to have a technical advantage over others in the industry, do you feel?
Oh, not just any, many, actually, Steve, on that regard. I think there'd be a huge competitive advantage in every form. And Sean talked about it. Improved risk assessment, better underwriting, better pricing. Both the sellers and the buyers are more effective in that manner if you are able to do that and leverage data and technology effectively. I think from doing that to becoming more proactive, monitoring and preventing risks, and going a step forward, and basically say it's which is a net positive for everybody in the industry. Definitely improve claims handling, being able to track down where the claims are, what's happening, right back to the entire base and what your exposure is and how you can participate and help. I think one area that I don't necessarily know we talked about is just a lot is lost because of the data not being aligned. And there was a talk about reconciliation. We're spending an immense amount of time, whether it is reconciliation in terms of technical accounting, settlement, or in claims. There's just a lot of leakage in the whole process. Being able to capture that leakage effectively and make sure everybody is getting their dues worth in every way. And then the point that you were making earlier is better management of capital and matching it with risk. So I think this is fundamental to almost everything that the industry can gain and be net positive. Obviously, it's a huge change and it's a huge buildup, and it needs to be done at a certain pace to be able to keep up with what is changing in the environment and the industry. So I think many benefits of doing this across the board. From benefits in the selection of the risk, in the terms of managing the risks, in terms of being able to make sure that you are able to match up capital with risk well. So across the entire value chain. Just one more thought I would pick up, and from something that I heard, and I think it's obviously seems like one of the core objectives and foundations of Tremor is the whole question on the evolution of the role of the reinsurance broker. From being somebody who today, obviously they do an element of consultation, but a large part of that work is being really holding the data together and making sure that the data transfer happens, the transaction flows through, huge amount of time spent on that. So move away from doing that to becoming a true advisor and a true consultant and spending almost 100% of their time on that, because that's really where the value add is. The value add is not in running the transaction. The value add is in the advisory capacity and how that role will evolve over a period of time and how it could be enabled by technology. I think phenomenal. And both the carrier and the broker are investing heavily in making that happen, because it is in the interest of the industry to be able to create more value and insight.
Yeah, I couldn't agree more there, Sameer. I think we're definitely seeing the brokers shifting in that direction. They're certainly talking in that way. And increasingly, I have to I have the pleasure of reading pretty much every reinsurer's 10Qs and financial reporting, and increasingly they are starting to talk about sort of capital efficiency and how technology is actually going to reduce their costs of capital as well, which is positive, I think, for the future. Nigel, turning to you, how do you feel an organization like Google can help sort of insurers and reinsurers to make more than marginal gains through the adoption of technology? And perhaps you could sort of mention a couple of the initiatives that you said you would touch on.
Yeah, no, sure. I think you've certainly hit a heartstring of mine. You've used the word marginal gains, so you know I'm a cyclist. So Sir Dave Brailsford had the term marginal gains for cycling, and Team GB and all the things wonderful things he's done there about breaking it all down, improving it by 1% and rebuilding it. One of the most frequent questions I've been asked over my tenure at Google so far is, how do we innovate like Google? And it's a great question. I don't think there's a day that goes by that I don't find out something new about our organization or a new team that exists somewhere, and they might do something differently. But I think how we can help in that space is by sharing our experience. I will be the first to admit we are not insurance, reinsurance, brokerage, or otherwise experts. We're experts in technology, and experts in technology that scales. And to put that into context, we have, again, all public, you can see it, we have 9 products, each with 1 billion active users. And you start to put those numbers into perspective, and you go, well, how did you get there? What does that look like? How do you design for that at the outset? And actually, not being insurance experts walking into these scenarios, I actually find super helpful, because we're not constrained by what we know today. We're constrained by what the technology that we've created, whether it's things like our Vertex AI capability for doing models and hands-off modeling and all that sort of good stuff. So I think for one, that's one of the upsides for our side. As you go through there, then you've also got a whole bunch of folks around the organization that do things in their own very unique way. So there's definitely not a single size or a single answer that fits all here. But I could go to a couple of examples you asked for. So one is our Octo group, our Office of the CTO. So you speak to folks like John Abel here in the UK, or Antoine, or our teams in the US, and they have a wonderful way of engaging and understanding technology in a way that's insurmountable to myself, but actually then taking the client problem and working out how Google Cloud would go after solving that in different ways. So you really are starting to open up client problems to a mindset and attitude and insights that I've never seen before. And then working with the client or working with partners to go bring that to life is quite exciting. A real life example of that in the UK insurance market would be what was created with Brit and Key. So as an example there, they created the first automated follow syndicate using Google technology. You might ask yourself in 5 years' time, well, why haven't we done that before? Or why isn't there now 20 or 30 or all people doing that? But I guess you have to start somewhere. So I think some really, really good examples that we can dig into that exist in pockets. One of my jobs now is to bring all those things together and say, well, actually, how do we piece them together to go solve some of the largest challenges in the industry right now? And that might be from cloud or from the other bets that we have and how they're solving problems in that space.
Yeah, it's interesting you mentioned the multiple products with billions of users, which is obviously far beyond most insurance and reinsurance company customer bases. But I guess with my knowledge of Google, having used it from when it very first version of the search engine launched, I know that it's building things that are easy for people to use and provide what people need and deliver information in a way that's really easy to consume. And that's really been a tenet of Google, I think, from the start, that's driven that very, very wide adoption.
One of my favorite examples I learned whilst joining was a really random, but it just makes you think. And when you realize the energy, effort, and passion that the teams put into designing and building products that are easy to use, one of the examples was, why are photographs coming in upside down? And after a while and through research, they realized that left-handed versus right-handed photographs taken on a smartphone are very different. So there's a really good YouTube video out there that shows what happens with someone's left-handed versus right-handed, and how those images are taken, and then how those are brought back into various different systems, whether it's insurance or elsewhere.
And that's a discussion for another webcast, certainly, is, and how do you actually learn more about your customers and actually understand what they really need, which I think is another area the insurance and reinsurance industry could do with focusing in the future, and I'm sure it will do. Now, moving on to Vasco, at Swiss Re, where do you expect some of the best gains to come from through your use of technology? I mean, could it be data storage and creating this single view of the truth that you mentioned? Or is it perhaps in being able to process data straight through from the front end client right the way through to your reinsurance and retrocession portfolios? Interested to hear where you and the organization feel the gains are going to come from.
Yeah, Steve, I think this is a very good question, right? And maybe I start by stating the obvious, right? Which is that, I mean, ultimately, insurance or reinsurance is all about understanding, risks, of course, their underlying dynamics, and ultimately deriving an adequate price, right? So, if I try to answer your question, I would say that the best gains from technology come from areas where it actually allows us to better understand and quantify these risks. And of course, but then with all the positives that it has on things like, for example, closing the protection gap, which is something very high on our agenda. So I would say this can include, building granular understanding on, for example, property exposures across the globe. It's a challenge, right? Or a thorough understanding of, say, weather phenomena with satellite and sensor data, and actually doing these things in a kind of interconnected way, as I mentioned earlier, right? So around this source of truth. Now, I would say, of course, technology also helps us to become more efficient, on our day-to-day business, and we'll continue to do so. But I would say, look, if I also look at the progress of and actually innovation that we have on things like, telematic solutions or, parametric products, I think this is also a great testament to the new directions that our industry is going, with this data opportunity, right? So just look at what happened the past few years, and I actually see some very good developments in this area. And here I would actually highlight what we've done. So what Swiss Re has done with our own telematics app, which is called Coloride, which basically allows, amongst other things, it actually encourages this good driving behavior. So you can basically track behavior, driving behavior in your mobile phone. But then what it can do is actually can connect to, risk solutions that allow for pay how you drive or pay as you drive, automotive risk products. And I think these are, good examples as to what it means when we look at the opportunity in this space. Now, I think it's really hard to say that where will be the biggest impact, but I would say that if I look a little bit at what we've just discussed, for me these would be very good pointers as to how I see the biggest gains coming from technology, Steve.
Great, thank you, Vasco. So we're about sort of almost 45, 50 minutes through our discussion now. So we're going to move on to the final sort of round of questions. And while the title of the webcast mentioned the future, I really wanted to get our panelists to sort of get their crystal balls out and see what they can tell us about where they think the industry will go if it continues on its sort of rapid adoption of technology, data and digitalization, and also how easy or challenging that journey is going to be looking forwards. And perhaps we could start with you, Nigel, and you could give us your vision for the future, maybe not giving away the secret sauce from Google, but how do you feel reinsurance can evolve alongside an increasing use of data? And what role does someone like Google have in helping this transformation to occur?
Yeah, it's a tough one, right? We've all been in the industry quite a while. We've seen it evolve. We've seen it react to the pandemic over the last couple of years. We've seen it react to natural disaster or financial loss and elsewhere over the last couple of years. For me, I feel insurance and reinsurance specifically, the future really is around collaboration and partnerships, and how by coming together and not all trying to do the same thing all the time, if you look at the energy and effort that's expended in each of the reinsurers today, that could be provided or enabled and supported by Google and many others that are out there that do similar things, I feel there's probably a better use of the outstanding talent, insight, understanding and capability inside the reinsurers, rather than rebuilding something that exists or is being built by organizations like ours that they can all leverage in a more efficient and effective manner. So for me, truly, it feels like partnerships and collaboration is where I'd spend some time and energy.
Yeah, I think you're right actually there, Nigel. There's definitely an opportunity to look outside the industry a little more frequently than people have in the past, and I do think that's changing at the moment. There certainly seems to be much more appetite to relinquish certain tasks and allow other perhaps even better qualified sort of organizations to do that for you, and then reap the benefits of the gains there. And perhaps there's also something to be said for the duplication that occurs across underwriters and brokers, as well as finding ways to harness greater efficiency by relinquishing some of that. Sean, moving on to you. Obviously, your goal at Tremor is to get as many insurers and reinsurers placing risk with capital in the most efficient manner possible. That's your entire sort of mandate there. But what of your wider view for how reinsurance could evolve over time? I mean, the placement piece is the end of the life cycle of a chunk of reinsurance risk. Do you think the industry is going to embrace advanced technology further up the chain into its own operations as well?
Yeah, so maybe starting with how we don't think it will evolve, which may be contrary to the opinions of some. I don't think we're going to live in a world where every risk is standardized up front, and we have these programmatic payloads of hundreds of lines of code defining the intricate specificity of each risk, maybe somehow living on a public blockchain to trade more price and cost efficiently. We don't think that's going to happen. I think the notion of needing to standardize and harmonize everything up front in a complex risk reinsurance industry, kind of requiring insurance companies to present their risk in the same way to reinsurers, it's something that many insurtechs and consortiums are chasing. But in our view, this will really only result in lots of competing standards, most of which become obsolete as soon as they're released. And this is kind of the problem in some sense. This was mentioned a little bit earlier of folks that are living in the industry trying to innovate without maybe not having the experience of seeing how other markets have changed dramatically over the years. So kind of what we do believe, though, is that reinsurance transactions will become more dynamic over time, enabled by technology, similar to the technology that we're building, of course, but powered by, and this has also been discussed by my fellow panelists, and we fully agree with this, powered by proprietary capabilities that participants themselves in the market are deploying. It's a bit problematic for everyone that 70+% of the reinsurance market basically transacts on the same day every year. The market will trade more frequently in our view. It's going to allow for participants to more finely tune their risk transfer. And it's certainly going to improve portfolio construction and shaping opportunities for capacity providers. We also think that each capacity provider is going to really develop increasingly better proprietary capabilities to assess risk relative to their own portfolio strategies on their own. These will be, and for some already are, core competencies for these capacity providers. And it's only going to accelerate in our view as each company modernizes, as the market overall modernizes. So for us, it's kind of like, therefore, any of this doesn't really require any upfront standardization work. It really requires capacity providers to get smarter and smarter at assessing unique data sets provided to them, and many of them are. I think we're at the very, very beginnings of using really, powerful technologies like NLP that will, kind of vastly enable this. When you're looking at treaty contracts that have 45 pages or something along those lines, trying to standardize all of that up front is definitely a fool's errand in our view. But there are technologies, as the world moves forward, that can actually begin to tackle this in meaningful ways. So that's sort of that's sort of our view in terms of how the reinsurance market overall will evolve. And in some ways where we don't think it will.
Yeah, no, that's interesting. Thanks, Sean. And I think some of what you said there really speaks to sort of the specialization of reinsurers becoming greater and their sophistication, which I think is absolutely key so that they can differentiate through their own view of risk, their own ability to understand and interpret risk, and therefore what their risk appetite is really going to give them the ability to underwrite in the market, and they'll become very well known for where their sweet spot is, I guess, and really be specialists in that area. Vasco, turning to you at Swiss Re, obviously you've got the scale, you've got the sophistication, you're at the forefront of digital adoption and transformation, but maybe you could provide our viewers with a few thoughts on what's coming next and how important keeping up with the technology trends is going to be for the industry.
Yeah, so maybe building on something that Sean just said, I would emphasize that there is still a long way to go to actually broaden the adoption of already available technologies. And look, clearly we see some nascent technologies, when we already mentioned things like quantum computing, confidential computing and others, which of course we follow very closely. However, if we just look at what is available already today, I think the industry can realize a lot more value. And we just heard for the example of NLP as another such example, but just look at what cloud can give, data platform services, APIs, all the data exchange techniques that that are out there. So again, without a crystal ball, I would say for many in the industry, I believe that in the next years, it will be a lot about digitizing, firm-wide operations, developing actually the right expertise as the basis for example, enterprise-wide transformative artificial intelligence and other advanced techniques. And I think as these techniques become more widespread, there will be a significant impact on our core businesses, be it underwriting, risk management, claims management. However, and I think I go back to something I mentioned a bit earlier, I think we need to keep in mind that, again, this is not just about tech, right? So again, I'd really like to leave this notion that tech per se is not the toughest part of anything we've discussed today, right? To the contrary. So for me, the message is that it's much more important to look at all these tech trends and opportunities, but then translate as to how can we actually realize some value with these opportunities with all these other elements that are not just tech. And again, I go back to having the right data, the right tools, governance, compliance, literacy, skills, and culture in the organization so that we can really move the needle as far as the tech opportunity is concerned. And I would even argue that also from a senior leader perspective, I think senior leaders also have to rethink and challenge themselves about how their businesses have worked in the past and could work in the future. So this is also, a challenge at the highest level of organizations, right? And I'll leave it here, Steve, with this closing.
Thanks, Vasco. Thank you very much, Vasco. Appreciate it. And so finally, Sameer, turning to you, what are your thoughts as to how the reinsurance market will evolve over the next decade as technology continues to advance? What is the data-driven future for reinsurance? I'm going to ask you to sum it all up for us now.
I think all of us are aiming towards that simplicity, but I only think that it will become more complex and will require a much more sophisticated solution, and a solution that not just technology can solve. It is expertise and technology coming together to be able to solve. As in, look at just how risks are evolving. Look at what the expectations for people and industries across the board are changing, which will only make it more dynamic in every way. So different solutions will be needed as we evolve and grow the industry. I think the companies that can leverage data more effectively and use the insight will clearly have a competitive advantage. But I do think that the overall industry itself will see an uplift. So if you think about the buyers, their ability to manage capital would definitely go up. If you think on the seller side, their ability to manage price and capital and exposure would be far higher than it is today. So while there'll be an overall uplift, there will be people who stand out, who are able to bring together both its process data technology, but I think a big part will be expertise in looking at it and being able to leverage all of that together. I think the other piece that I do see is a fair bit of innovation and disruptive innovation, whether it is coming from the insurtech, so people obviously like Tremor coming in and creating innovative marketplaces, or you look at the blockchain initiative with P3I, Accord doing the standardization. So there are industry initiatives that are going to disrupt it. And then the third dimension that I would bring in, that it will not just come from the reinsurers. It will also come from the insurers who will demand it on the other side. It will also come from the brokers. So the entire ecosystem is pushing in that direction, but all of it has to eventually come together to be able to operate in a much more seamless manner and focus on really the expertise versus just working on the transaction and getting to the right level of data, technology, expertise, and process, and balance it out to deliver the maximum benefit.
Great, thank you, Sameer. I really like what you said there about sophistication, because for me, that's one of the really key things with technology, that as the industry adopts it, it should really enable the industry to do more. And we all talk about protection gaps a lot of the time, and really I think technology is one of the things that will help to close those, either by efficiency and making more capital available, or through better product design and construction. So we are right up on the hour now, and we have got a few questions, but I'm going to focus just on one in particular because it's very, very timely. Obviously, this week is the COP26 Climate Change Conference in Glasgow, and somebody's asking, given the focus on climate risk this week, is technology and data going to assist with making climate risks more transparent, understandable, and therefore more manageable? And what does this mean for reinsurers and their ability to underwrite climate risks? I'm guessing perhaps this might be a good one to throw to Vasco, given the Swiss Re's focus on climate as one of the areas you underwrite.
Yeah, so Steve, absolutely a topic very close to to our hearts, right? And here, I would just say absolutely. I think tech can help, and I mean, instead of just giving some kind of general perspective, I would actually go into something we've done very recently, and a very specific project that is now actually in the public domain with regards to how we are helping our corporate clients actually answering questions like the one you've asked, right? And what we've done is we've actually leveraging our data platform, we enable corporate clients to quantify impact of physical climate risk on their portfolios, right? So what we do is we use these climate risk scores to identify portfolios' exposure to climate change. And we do this by having a framework that combines all this information about forward-looking climate model data for precipitation, sea level rise, our own global flood and storm surge zones, to create this kind of high resolution assessment of physical climate risk around the globe, right? And then what we do is we offer access to clients with this data-driven application, which basically allows them to look at their portfolio, so they can actually upload their portfolios, and then they can individually explore what are their own climate exposures for their locations, right? And this is actually quite novel in the industry. It's definitely also an innovation driven from the Swiss Re experts. And I think it brings a completely, different and transparent way of understanding what is the actual impact of, the risks that come from climate change, right? And I know this is a first step, and look, there's a huge journey ahead. We're all following the COP26, discussions and all the big challenges that are out there still to be solved. So what I would say is that this will be like a first step into what I expect to see happening a lot more in the coming, months and years, as far as sort of innovative data-driven solutions are concerned to tackle climate risk. Over to you, Steve.
Thank you, Vasco. And that's really interesting, because obviously it speaks to using data to help your clients understand something better, but also to producing new product opportunities at the same time. So it's a very clever use of data. Finally, Sameer, very, very quickly to you, Sameer, I was just wondering, from your point of view at Genpact, is climate risk something that your clients come and talk to you about, and do they ask you how technology can help them understand that?
Not really, if I may honestly say. I mean, it's a topic of discussion and we engage, but don't necessarily do. Some of the solutions are quite similar in terms of looking at how we look at data, how we bring in and integrate that with the risk assessment patterns, but not necessarily a specific solution. But very interesting topic. I will tell you, it's top of mind for clients right now. I do think the solution that Swiss Re is put together is a great starting point to begin with, but long way to go.
Yes, yeah, no, certainly. It's still early days in the industry really understanding climate and finding out exactly how it's going to respond to it, and then transition towards the net zero that everybody is now aiming for as well. Well, look, we're actually over time now, so I'm going to draw this to a close. So I'd just like to say a huge thank you to Genpact as sponsor of this event, and to Sameer Dewan. Thank you for participating. Thank you to Vasco from Swiss Re. Thank you to Sean from Tremor, and thank you very much to Nigel from Google as well. I really appreciate you all spending some time with me today, and hopefully our audience found this interesting. Just for our audience, you will be able to view this on demand. You will receive an email that will give you a link to view this at your leisure, and you can even share that with your colleagues if you think they'll find it interesting. So just like to say thank you all again. Thank you very much to our panelists, and thank you to everyone who tuned in today.
Thank you.
Thank you so much.
Thanks,
everybody, guys.
Thanks, everybody.